Ladies and gentlemen, we now have a short presentation on the topic Responsible AI for Banks, Balancing Cost, Performance and Risks by Mr. Sandip Patel, Managing Director, IBM India and South Asia. In his role, Mr. Patel plays a key role in enabling capabilities across IBM's global missions in India, including research and innovation labs. Over to you, sir. Sir, also may I humbly request you to complete the presentation in the allotted time frame of 10 minutes. This will help us go as per schedule. So,
Great. Good afternoon and welcome. Grateful for your presence here this afternoon, and it's an honor always to be here at the Banking Association's annual event. I know that we are trusted partners for many of you in this esteemed audience, and always grateful to have the opportunity to partner with you. I think, look, I've always maintained that we are in a very defining moment, witnessing India's digital renaissance. And I like to call it the Naya Daur of Digital Bharat, which hopefully will propel us very quickly into Viksit Bharat. And banking and financial services, I think, are going to be the fuel that actually propels us a lot faster into that era. Now, look, I've always maintained, and I've grown up in the financial services industry, and I've always maintained that banking is a tough balancing act. While you've got, there's a lot of complexities in terms of constant pressure for both cost effectiveness, managing and working through a complex regulatory environment, mitigating compliance risks, etc. And doing all of this while you need to have a journey towards a hyper-personalization of customer experience. And I think in today's world, I think everyone will agree that the customer no longer looks at how well you are performing as a bank or how well you are operating as an online bank, but they're sort of measuring you and evaluating you in terms of their best digital experience that they have across any of the properties that they visit and any of the retailers that they go to. So this is sort of the world that we live in, and this is where, not surprisingly, to strike this delicate balance, the banking industry themselves is going through a very significant shift. And this shift is driven and accelerated by the rapid advancement of AI. This transition towards an AI-powered banking is reshaping how financial institutions operate, how they interact with customers, and they continue to deliver services through AI-infused back-office operations. Now, this change is also underpinned by a transition from a traditional monolithic legacy systems to open, modular, agile, and AI-infused architectures. And that's how the shift is going to happen. And this is the only way in which banks can enhance customer experiences, improve their operational efficiencies, and gain a competitive advantage in a rapidly changing financial landscape. Now, when we think about AI, right, AI also is a very tough balancing act. Where it continues to evolve, the impact on banking industry will only deepen. However, as banks accelerate their AI efforts, one thing is becoming very, very clear. AI requires a fair amount of balancing itself. You need to strike a near perfect balance between risk, performance, and cost. And one can't come at the cost of the other. You will need AI models that are transparent, explainable, and free from bias. So the whole issue around AI governance becomes very, very important. You also need the right level of performance for targeted business domains and use cases. They have to produce an ROI for the kind of investments that you're doing within the AI space. And at the same time, you need to have the ability to deliver lower cost of ownership, and the risk is higher than before. Now, whilst this is what the need is, reality is far from this need. So one of the things that is really important to think about, right, is that where are you in your AI journey? If we look at numbers that are out there, BCG has observed that while 98% of companies are dipping their toes in the AI space, only 26 have actually scaled it to deliver real value. We recently did an adoption index, an AI adoption index. We did this globally. What was very interesting is that in India, we had probably the most number of enterprises, over 59%, that were actually experimenting with AI, and this was the largest amongst all the countries that we serviced. However, again, it was a similar number, 24 to 26%, that were actually scaling AI in real numbers, right? So there was a lot of experimentation that was going on, a lot of pilots that are going on. And this number is clearly higher for banks and financial services institutions. So in today's world, right, we actually believe that the time for pilots is over. We've had a lot of, I think we are past the AI hype cycle. And we are at a point where there is a lot of expectations from this technology. The good news is the technology is available to really start scaling. What's really important is as you scale vertically from pilots to production, from hype to the how, from experimentation to deployment, it's really important to look at where do you pick the right use cases to achieve true value from AI. Now, let me illustrate that in a little bit. This is the BIAN framework. I'm sure you recognize this as bankers. But the true value of AI is achieved when it is deployed across the length and breadth of an enterprise, particularly where you can scale it horizontally. For banking entities, BIAN is an industry standard model to determine top priority areas where you can actually apply generative AI. And these are areas, the ones which have high labor and cost concentration, large document handling, process delays, high cost of compliance and audit gaps in risk management, gaps in technology systems, etc. Now, you can see all these areas which are represented in green. This is where I think there is a lot of opportunity to really build and scale AI. And this is something that's enabling enterprises to scale AI horizontally today is agentic technology, agentic AI technology, which is number one strategically, which is referred to as the number one strategic technology trend called out by Gartner in 2025. What do you mean by that? So agentic AI is a space where AI agents that you deploy can operate autonomously with minimal supervision. They handle tasks of varying complexity, enabled by supervised agent orchestration that sits on top of it. Think of it almost like, it's a weird sort of imagery here, but think of it as an octopus head that sits across various autonomous AI agent suites that the business leverages. Now, this is something which is available in the market. I think a lot of technology firms are moving into agentic technology. We obviously, within IBM, we have something called Watson X, which is our AI platform, and Watson X Orchestrate is a facility that makes it easy to design AI agents that can automate repetitive tasks and simplify complex processes, helping enterprises to scale AI across the length and breadth of their enterprise. So as you look at this, I want to sort of bring this to life in the form of real use cases in AI. So if we look across, 4 different dimensions, right? Customer management, operational efficiencies, risk management, and technology modernization. These are different areas where use cases are very prevalent in AI and where organizations are actually getting value from AI. What I've highlighted in blue are areas, particularly in the banking and financial markets, where where use cases are very, very relevant and people are getting the value out of it. Now, as you think about AI, I would encourage you to think in terms of a few key principles as you deploy AI within your organization. Number one, we've always maintained that AI will be multimodal in nature. I think the earlier panel, there was a lot of discussions around, how you need to have an open ecosystem where you can actually deploy multiple models that you can use within AI. Second, it needs to be free from bias. It needs to be traceable, where you have to have transparency, where you can explain the results of AI, and it needs to be governed in a way that where you are applying it across the enterprise. Now, as you think about the costs of it, bigger is not always better. And this is where the era of small language models is becoming more and more prevalent. You don't need a 350 billion parameter model where you can get the same work done within an 8 billion parameter model and so on. So this is an era where we are moving into small language models, which will continue to evolve. And these, we are of the opinion, need to be democratized and put in open source, where people can expand on these models, extend them, and move it forward. The last point I will make is, obviously, we have been at this for a while. We launched Watson X as a platform, an AI platform, about 20 months ago, and the response has been nothing short of phenomenal. And as we look at this entirety, this platform in its entirety, needs to be open by nature, i.e. have multiple language models that you can use in it. It needs to be hybrid by design, so you can operate it on the cloud, on-prem, private cloud, all of the above. And there needs to be a very strong governance where you have data provenance and the ability to really understand how you are governing AI across your entire enterprise. This is something that we very firmly believe in, and I think if we look at the recent guidelines and others that RBI has been issuing as well, it aligns to this governance framework. So AI that is governed appropriately, really, really important, particularly as you start to scale this up. So in conclusion, I will just say that the future of banking clearly lies in our ability to harness the power of AI responsibly and effectively. At IBM, we are committed to partnering with you on this journey, ensuring that our AI solutions are not only cutting edge, but more importantly, ethical, sustainable, and something that are clearly free from bias. Thank you for your time, and I look forward to our continued collaboration. Thank you.
Thank you for the valuable insights, sir.